Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking in on the semiconductor sector, AMD, NVDA, and MU. The sector was under some heat this week as we received downgrades in NVDA, then downgrades in AMD. MU is left standing right now, but checking in on these charts, it did make a significant dent. You can see AMD lost a lot of support on that gap down where we had the bearish reaction to that downgrade. So we took out a bunch of supports build up over the month of March, and we do still have one support down here at 1238, and we formed a higher low compared to that at 1283. It was a bullish reversal hammer, so the bulls did buy that dip, saw a little bit of follow through today. Not entirely strong today, but we are still looking up towards the gap all the way up at 1410 to see if the bulls can fill that gap. It certainly isn't going to be a straight shot up there, but we're going to see if the bulls can form higher lows and higher highs, resuming to fill that trend, or that gap, I should say. And they want to hold that low of 1283 for a long time going forward. They want that to be our new higher low. And you see on the weekly chart, we are still holding those exponential, that 8-period exponential support. We just barely held it, and that level is held for the past couple of months, so the bulls want to keep holding it. And you can see the higher lows more clearly here in this condensed view of the weekly chart, 1238 and 1283. Still maintaining higher lows, certainly a setback, on the verge of a bearish MACD cross, high bear volume, but the bulls are still holding on to a strong-looking weekly chart. NVDA saw the big gap down with its downgrade as well. And we did see a bullish reversal candlestick at the bottom where the bulls bought the lower wick. We saw that bullish reversal candlestick. We saw follow through to the upside today, but the bulls were unable to close strong with a little bit of market weakness. They felt that, and we saw a pretty strong correlation between NVDA and SPY, the S&P 500, over the past 2 days. So rejecting on the exponential resistance backtest, we did not confirm the bullish reversal candlestick, and the bears are still in control right now. So we're looking at supports of 99.72 and 98.41, and resistance is 101.73. So not a very strong recovery at this point. The weekly time frame made a significant bearish break. That middle Bollinger Band on the weekly had held for over a year, and we just lost it for the first time. So that is a very clear red flag, and the volume stands out for the bears, as does the bearish close on the candlestick down near the low of the week. So we have the all-time high. The low of consolidation was 95.17, a lower high at 109.96 and 110. And now it's a very important support level of 95.17. If we break that level, we shift the weekly trend, which has been all bull in 2016. And we'll go from lower highs to lower lows and shift that mindset, shift the momentum. So it's a very important must-hold level of 95.17 for the bulls. And we'll see if we are heading to test that level this week, as again, we're not seeing a ton of strength right now on the daily time frame. MU, the bulls are the strongest on the daily. It was the weakest in terms of these three in the videos I've done in the past, and that's because AMD and NVDA were both hitting all-time highs. MU had a lot more work to do on the weekly time frame, but now on the daily time frame, because we have not received a downgrade, at least yet, the bulls are holding on very strong. We have the gap up open, and the bulls are holding that gap up. We have a must-hold support of 28.02. If we break 28.02, we start filling this gap to the downside, and there's very little support down here. The gap fills at 26.49. Middle Bollinger Band would come first, but the bulls really want to hold 28.02 to keep from filling that gap. In terms of resistance, we're seeing 28.91 and 28.86. Clear lower highs here that the bulls have to break to resume the uptrend. So we're on the verge of a bearish MACD cross. This is a bull flag of consolidation, and you look at it on the weekly time frame, certainly looks very healthy here. We're still holding the 4-period exponential moving average. The bulls are very strong and in control, and we are looking for a bull break of 28.91 to indicate that the bulls are going to prevent from filling this gap to the downside in the near-term future. If we do break 28.02, that can be a bearish entry signal, and we'll be watching the middle Bollinger Band after that, but break 28.02, and there could be some decent downside here. So from here, we are going to be looking at the reaction to the S&P 500, cautious of any bearish news here on MU, as we have seen bearish downgrades on AMD and NVDA, and we will check back in the near-term future. Appreciate you watching. Have a great rest of your weekend.